Alright family, so this video is for those in the swing course, but I'm going to share it with, going to share this one, guys, with the whole group. So what I want to do, guys, is talk about, we got the Micron daily squeeze here. We've got a weekly squeeze taking place as well. So let's talk about, guys, a couple different ways, you could swing trade this, but let me give you guys a sense of, what I'm looking for here as far as the context of the swing trade. So, we look at Micron, guys. Now, obviously, Micron is a semiconductor stock, and obviously, along with technology, that's been the party here this year. Tech and semis putting the market over their shoulder, carrying them here to the promised land. So, if you look at AMD, guys, freaking ridiculous move out of the squeeze, just massive eruption. We look at LRCX, just a total freight train this year, still going strong after earnings. We look at Qualcomm, boom, big ass gap up after earnings. So these semi names, guys, are looking phenomenal. And then you got Nvidia here, who's been a total freight train inside a daily squeeze, probably going for another all-time high sometime soon. So, I look at Nvidia, who has exploded. I look at AMD, who has exploded. I look at Qualcomm. I look at LRCX. And then I say to myself, man, big money for the second half of the year here continues to pile into these semi names. They're going to run even further. And that is what makes this Micron setup here, guys, very, very attractive. This one hasn't quite gotten the same kind of love, hasn't seen the same kind of demand, as an Nvidia, an AMD, a Qualcomm as of late, a Lam Research. But it's in the group nonetheless, guys. Even if they don't specifically buy the crap out of Micron, if they continue to buy the crap out of the semiconductor stocks for the second half of the year, then there's a really good probability that Micron is going to move higher. So that's the context, guys, at which I'm looking at this chart right now. Though it's a daily setup, I'm looking to use the daily squeeze here is just a good opportunity, guys, to get a bit of a longer term position. All right, I'm going to use the daily squeeze here to get myself into a position that ultimately, guys, I could hold all the way up until the end of the year. So I'm looking at a little bit of a longer term swing here. And again, it's under the context, guys, that semis have led the market along with technology. And if we do continue to lead the way, I like the odds of Micron at least moving above 50 bucks over the next 4 months. That's the thought process. If big money keeps piling into semis, I like the probabilities, guys, of Micron doing something to the upside here over the next few months. So when we're talking about, guys, a move where we're looking to get positioned for a longer term swing, right? I'm looking out here, guys, and we got the Septembers, we got the Octobers. Personally, I'm looking at January here. Give me all of August, September, October, November, December, and then right into January. A good 7 months here, guys. And during the course of these 7 months, if big money continues to pile into semis, then I just like the odds of Micron making a move here. That's the thought process. So, a couple different ways, guys, we can play the squeeze. Right? Obviously, you got your put credit spreads, you got your naked calls. Now, my thinking here, guys, of the naked calls on Micron, this isn't a very big mover. Meaning it doesn't have a big ATR, and it doesn't really, guys, just kind of throw off that crazy premium that a name like Nvidia or AMD will. For example, we're trading at 50 right now, and we kind of got, all-time highs here around 62, 64 bucks. All right, now, even if, guys, I go with an in the money, at the money, if we get that move to all-time highs, I'm looking at about a double, if not a little bit more. Right? For example, I would go with the in the monies, say that the 42 strikes, about a delta 70. If we make a $12 move, those options, guys, are just going to about maybe double. Right? Now, of course, you got, implied volatility and other factors that can play a role. But nonetheless, right, I'm kind of taking into consideration that I'm not going with the out the monies, because I ain't buying an out the money call and then watching that position lose premium every single day if we're not ripping. I want to get positioned here in the squeeze with options that are going to give me a good bang for my buck if I get the move I'm looking for over the next few months, but not options, guys, that are going to get torched if we just continue to squeeze. So if I was gonna buy naked calls here for a longer term swing, that's where I'd be looking. But I'm sitting here saying, A, I'm not really a fan of buying options as a general statement. B, if I want to get my position size I'm looking for, right, I'm trying to get decently, positioned in this thing. And, best case scenario is that this thing rips and, breaks to all-time highs before January, and my options are maybe going to have doubled, right? Keep in mind, guys, y'all, or most of you are used to trading the weekly options, where you get a big move and the options go from $1 to $3, $4, $5. These longer term to expirations, it can be a little bit different. So I'm taking that into consideration this morning. And, no surprise to you guys, just the proposition of doing a credit spread sounds that much better to me. And I can tie up, a shitload of capital here, and I can play the whole game of, the day-to-day noise. I'm in the green, I'm in the red, right? All that bullshit. And then, wow, we get the move I'm looking for. And, I sat through all that. I tied up all that capital for maybe, a double. Something along those lines. Just to me, guys, given my personality, it's not worth, the amount of time I'd have to sit watching this thing, right? A double, hell, even a 200% return, at least for me, really isn't worth it. So what I'm thinking, guys, right? Same mindset, looking for semis to continue to be strong second half of the year, with the expectation that if that does come to fruition, Micron should at least move a little bit higher, right? So I'm looking out here, guys, at January, and I'm loving right now the idea, guys, of a credit spread, selling the 47, buying the 45. We're getting almost $1 of premium, but more importantly, guys, you're getting, let's call it a, not 1-to-1, but you're damn near close enough, right? You do 10 contracts per side, you're risking 1,000 to make just about 900. I'm calling that a double. It's damn good enough. And I just like this, guys. You know me. I like this more than the idea of getting naked calls, having to monitor that bullshit every day, and then, man, I get the move I'm actually looking for, and I've gotten a double, maybe a little bit more. So to me, right, with the whole context of what I'm looking for here, what sounds a lot more attractive, guys, right? And I'm giving this thing a good August, September, October, November, December, right? A good 5-6 months here, guys. What's more attractive to me, right, is going, say 200 contracts per side, right? Relative. It's an appropriate position size for this kind of swing, right? And I'm putting up 20 grand of risk to make just about 20 grand of profit, right? Give or take a few $1,000, 23 grand to make 17,000. And as you guys know, right, that's my 17,000 in a couple of months from here, as long as we stay above 47. Right? So the whole context of my thought process here is that semis, along with tech, have been leading the way all year. And if the market's going to continue to be strong, guys, I doubt that financials and energy and all that whack shit is going to take over. Probably going to continue to be semis and tech. So if that is going to come to fruition, I love the idea of shorting some puts down here on Micron. And then if we get what we're potentially looking for, which is just simply, guys, more continuation from semis, that can turn into a pretty damn nice paycheck. Right? That, guys, would be a nice way to start, 2021, is coming in, picking up a nice 15, 16, 17,000 bucks of profit, right? So planting a seed here, a seed that I might keep on the line for 5 to 6 months, but that's why I'm okay with this risk, guys, right? Might be about 20,000 of risk overall, but over the course of, 5 to 6 months, we kind of break that down, how much am I really risking per month here? I'm comfortable with that. Right? I'm comfortable with that. Because I can make up for that, right? If over the course of 5-6 months, this position goes to 0 and 20 grand is gone, remember, guys, all these numbers are relative. But if that takes place, I'm confident enough that over the course of the 5 to 6 months, I'll make more than the 20 grand on other trades, offsetting that loss and still moving the ball forward. But that's my idea here, guys. Maybe I do half that position size, maybe I go bigger, but nonetheless, I just don't like the calls. Right? And I know last week we talked about the calls, but if I'm looking to just park my capital here and then get the hell out and ignore it, the idea, guys, is going down to 47 and then saying, I'll see it in January. I like that idea that much better. And again, if we just continue to chop, I'm still making my money, right? We make a little move, we fail, all that bullshit, I'm still profiting as long as we're above 47. So after a lot of consideration, guys, of, what's going to be the best for my personality, right? What would be the best swing trade, to allow me to focus on the things I have to, which isn't, just my other trading, but my responsibilities here with you guys in the group. That just sounds a lot more entertaining to me. So that's my mindset here, guys. January expiration, playing the daily squeeze, but just looking to get positioned for potentially a longer term, bigger picture move here.